I am Mark Vickers. I'm a partner in the banking group in London with specialist expertise in non-performing loans. We recently published our research report into the Greek NPL market, and I would like to share what our research highlighted from an investor perspective in two areas: prospects and preferences. Starting with prospects. Investors rank Greece as the number one European NPL market in which they are most likely to invest over the next 12 months, significantly ahead of Italy and Spain. 55% of our investors surveyed declared that they are very likely to invest in Greek NPLs over the next 12 months, with a further 35% of respondents declaring they are moderately likely to consider investing in Greek NPL transactions. So that's 90% of the investor community we spoke to expressing their enthusiasm for Greek NPLs. Consequently, we can see that the prospects for buy-side action over the next 12 months are very encouraging, subject of course to there being a meeting of minds on the sell side. In terms of investor preferences, the research has produced some interesting findings. There are a lot of areas where the seller and buyer preferences are relatively closely aligned, but there are some areas which do raise some questions about how readily the market will kick off. 50% of respondents on the sell side think that investor price expectations are too high. 90% of investors are keen to buy hospitality-related assets, but according to our research, none of the banks are prioritising the sale of such assets, given the improving economic prospects of hospitality loans as an asset class. And finally, a significant majority of investors are keen to enter the market through joint ventures with the selling banks. But, according to our research, none of the selling banks are particularly keen to go this route. These are just some of the interesting observations contained in the research report, and I hope you find it a really insightful and informative read.